Hello everyone, and welcome back to Explain the Charts. Today is October 20th, 2025, and we are turning our attention to Alphabet, ticker symbol Google. The stock is currently trading just shy of its 52-week high, showing incredible strength, and there's a lot of news driving this price action. In this video, we'll break down the latest headlines and then dive deep into the charts to see what they're telling us. First, let's talk about the news, which has been overwhelmingly positive. Sentiment is extremely bullish, largely fueled by excitement over Google's AI initiatives. We've seen major analyst upgrades, with Goldman Sachs reportedly raising its price target to $288 and Citi boosting theirs to $280, citing increased adoption of the Gemini AI model. This optimism helped push Alphabet into the exclusive $3 trillion market cap club just last month, a huge milestone. Other positive catalysts include Waymo's continued global expansion into driverless services and a favorable legal ruling allowing Google to retain its Chrome and Android businesses. However, it's not all clear skies. There are some points of concern for investors to watch. These include an ongoing NHTSA safety probe into Waymo, some notable insider selling, and analyst concerns about slowing YouTube engagement for the first time in years. Competition in the custom AI chip space is also heating up, which could pose a long-term threat. Now, let's see how this news landscape translates to the price action on our daily chart. Looking at the big picture, Google has been in a powerful uptrend since its low of around $140 back in early April. The journey has been volatile, especially with the sharp drop we saw in early September, where the price fell from over $210 down to the $148 level. That was a significant shakeout that tested the conviction of many traders. However, the recovery from that dip was swift and aggressive, culminating in a massive breakout in mid-September. This breakout coincided perfectly with the news of Google joining the $3 trillion club, showing a strong correlation between positive news and buying pressure. The price smashed through its previous resistance around the $214 mark and has been climbing steadily since. Currently, we are challenging the major resistance level, which is the 52-week and all-time high of $256.96. On the downside, we have established several important areas of support. The most immediate is the psychological level of $250, which also served as a consolidation zone recently. Below that, we find a stronger support level around $240, which was a previous resistance area. A major support zone sits back down in the $230 to $235 range, marking the peak before the September dip. Let's zoom in on the daily chart to get a better look at the price action over the last few months. Here we can clearly see the dramatic sell-off in early September followed by an even more dramatic recovery. Notice the significant increase in volume on September 3rd and again on September 15th, which confirmed the breakout and showed strong institutional interest. After that explosive move, the stock entered a period of healthy consolidation for several weeks, trading in a range between roughly $240 and $250. This basing pattern was very constructive, as it allowed the stock to build energy before its next move higher. The breakout from that range in mid-October was our signal that the uptrend was resuming, leading us directly to the all-time highs we're testing today. Now let's switch to the hourly chart to analyze the short-term trend in more detail. Looking at the last few trading sessions, the bullish structure is very clear. We see a pattern of higher highs and higher lows, which is the definition of an uptrend. The price is currently consolidating near the top of its recent range, which is a bullish sign as it digests the recent gains. Bulls are showing they are in control by holding the price at these elevated levels. An important intraday support level to watch on this time frame is around the $254 mark. As long as we remain above this level, the short-term bullish momentum remains intact. A break below this level could signal some profit-taking and a potential pullback to the next support at $252. Traders should watch for any signs of reversal, like a failure to make a new high followed by a break of the recent low. For an even more granular view, let's drill down to the 15-minute chart to look at today's intraday action. Based on the pre-market and early session data, The stock opened strong around $254.69. Buyers stepped in almost immediately, pushing the price to a session high of $256.38, directly challenging that all-time high resistance. We are currently trading around $255.92, holding onto the day's gains quite firmly. This indicates that there is very little selling pressure at these new highs. The key intraday level for bulls to defend is the day's low at $254.23. A hold above this price keeps the immediate momentum strongly positive. A break below it could see the stock drift down to test lower support levels within the day. The battle between buyers and sellers is happening right at this critical all-time high resistance, making the price action here very important. Alright, let's switch back to the daily chart to recap and discuss what we should be looking for moving forward. To summarize, the key resistance to watch is the all-time high at $256.96. A clean break and close above this level is extremely bullish. On the support side, we have minor support at $254, a more significant psychological level at $250, and major support down at $240. So, what are the potential scenarios? The bullish case, which I would assign a 70% probability to, is driven by the powerful momentum and overwhelmingly positive news cycle. For this to be confirmed, we need to see a decisive close above $257 on strong volume. If that happens, the stock enters price discovery mode, and the analyst targets of $280 to $288 become very realistic short to medium term goals. The bearish case, which I see as having a 30% probability, would likely be triggered by a failure at this resistance level. We need to be cautious of a potential buy the rumor, sell the news event, especially with Q3 earnings on the horizon. A rejection here could form a bearish double top pattern. Confirmation for the bears would be a break and close below the $250 support level. Such a move would likely lead to a deeper correction, with $240 being the next logical target. Key things to watch for will be the upcoming Q3 earnings report, any news regarding the NHTSA probe, and, of course, the overall market sentiment coming from the Federal Reserve. Keep these levels and catalysts on your radar when planning any trades. Thank you for watching this analysis on Explain the Charts. Please remember, this content is for informational purposes only and is not financial advice. Always conduct your own thorough research before making any investment decisions.